Thank you for attending this Business Minds webinar. So this is one of a series that we're doing worldwide, and particularly in the Business Minds locations of Australia, Denmark and Philippines. So a little about Business Minds. We are a data analytics consultancy and we focus on making a difference to business with the practical use of insights gained from data. So a little about how we're going to run this webinar. It'll take about half an hour. Please note that we have put you on mute, and if you'd like to ask a question, please type it in during the session, and then we'll address all the questions at the end in the Q&A session. The webinar will be recorded and you will be sent a link afterwards. Now, if you have any technical problems, please check the help information, and also, please press the raise hand icon at the top. So, to get started, we're talking about banking analytics for the business today, and really what we are going to look at is first of all, what are the challenges of banking analytics, and particularly focusing on the business area. Then what can the current data that you might have tell you? Then we'll look at opportunities of structured and unstructured data, so from combining them together. Then we'll look at tips and ideas and how to work with the analysts. Then we'll have our Q&A session. So first of all, banking analytics and the challenges. So with banking, we're in quite a fortunate situation. We have a lot of data, but it can be seen as a data deluge. And it's difficult to know how to optimize business value using this data. So where do you start? How do you ensure you get business value, you keep engaging your customers, and you deliver what the customer needs? Another challenge is working with the analytics team. Just wondering if you have faced any of these scenarios. So whichever team you work with, the BI, analytics, IT department, they say, no, it can't be done. No, it's not a priority, or no, the data is not available. So in some situations, you may find that the analytics area doesn't understand the business or business part that you're working on, or certainly recognize the opportunities in using data for business benefit. Challenge 3, I think, is in accessing the data. Not sure if you have direct access to the data, but you might be in a situation where you're fully dependent on an analytics team and it's slow to get the results out. So, a few probably challenges that are common to a lot of people. Now, so let's get into what data do we have and what can it tell us. So we certainly, as I said, are quite fortunate in banking. We have quite a plethora of data. There's a lot of transaction data. There's a lot of information we can discern about our customers. So, for example, we could certainly use our data to discern, in this household, we have a couple, Damien and Jackie Green, and they have 2 children aged 7 and 10. So things we can probably tell from application forms and so on. Then from products being held, so for example by home loans, we might be able to see that they have a house in Balmain that they're living in. They might have an investment property, and also then if they have insurance, we can maybe tell that they've got a couple of vehicles. Then coming onto the middle column, we can see that through transactions, if we have their main transaction account and perhaps credit cards, we've got a good detailed view of their income levels and also their monthly expenditure. So using that data, we can split that down into categories to understand, okay, what are their living expenses versus discretionary expenses and also investment expenses. So we can get a good idea of how wealthy family is and what kind of things they spend their money on. Also, we can combine in demographic data, and so here I have demographic data around the postcode. So this is Balmain, a suburb in Sydney, but yeah, you can get demographic data down to quite low levels as well. So match that in with your data. So so over time we can also understand the cash flow of this family and understand when they might be a bit low on cash flow. So certainly from other results, this family had been low on cash flow in certain times. So now let's look at it from a product holding and opportunities profile. So we can see from the banking products held, which are here. So they've got a transaction account, savings account, credit card, 2 credit cards. So we can see, okay, what are their current and maximum and minimum balances through the year. Also insurance products that they hold. So we can see they have house contents and 2 cars. And also we can surmise the external products that they hold just from transactions. So we might say, okay, there's regular payments going to the Tower Insurance Company. The kind of products they sell are life insurance. By the payments that they make, it's likely that they have this level of insurance here. And likewise, home loans. Home loans are being held at a competitor bank, and yearly payments are 54,000, so we can surmise that the estimated value of the home loan is 650,000. So then coming down to recent events, let's look at perhaps some of the browsing behavior of these customers. So we can see that this customer browsed home loan rates 1 day ago and also browsed investment home loan rates. So we can see there's a bit of a need here. Then we can put this all together, and this is warped a bit, sorry, it's looking very skinny. We can see that in combination with the browsed home loan rates, there's currently no home loan held with our bank, and this family do have low cash flow situations. So why don't we take the need and refine it with the past needs of the customer, and make a personalized offer of a home loan with flexible drawdown. So there we're using all the information, putting it together, and personalizing the offer. Then another example of what we could do here is also we're seeing that investment home loan rates have been browsed. No current investment home loan is currently held with us. It's an opportunity for a multiple product discount in taking out the previous offer as well. So let's say discount in home loan rates by taking out an additional home loan. So there, yeah, we have used a lot of the information and sent a timely offer to the customer, satisfying what we certainly perceive are their needs. Okay, so that's a quick look at data we have now, and an understanding of how we could potentially use it. So now let's look at opportunities with structured and unstructured data. Data that you may have but you're not currently using are some examples are customer web and app interaction data and location behavior. Also customer emails, call center transcripts and audio recordings, human resources data that's stuck in the human resources system. Also, with the machines that are out there, your ATMs, servers, and merchant terminals, you might have machine logs of how they're performing. Also, you might have videos, images from your branch videos, perhaps traffic snapshots as well, or mobile locations of your customers where they're using your app. So publicly available data that could be useful. Okay, we've all heard about social media, but there's a lot of info online, product review sites, newspaper articles and blogs that are talking about your brand. Also, there's weather, census data, population financial data, so data that can be purchased, and also data on house prices. Now, looking at opportunities for analytics from new technologies that we do have, I think there's just a few standouts that make a big difference to us in the business area and in understanding our data. So certainly self-service visualization, really that's where you've got the tableaus, click views, or SaaS visualization tool, allowing you don't have to wait for the reporting factory to churn out your report. You can quickly create your very impressive charts for the board report, and also it allows you, most importantly, to do discovery at the speed of thought. So you can move from one insight and then drill down on that to look for the next insight. But whereas if you've requested the report, it's coming back from the report factory, you've got to wait a few days for that to come back. You've forgotten what you even requested the report for. So I think that is the most impressive result of self-service visualization. Also, we've got digital and social channels. So it's allowing us to have lots of additional data on customer behavior and their interests. It's also two-way, so we can understand but also interact with the customer and potentially in real time as well. And of course, best results we can achieve are by combining that data into our data warehouse with all the existing data. Also, data lake area. So what this area allows you to do is to add your own data from wherever you've obtained it. So first of all, you don't need to wait and you don't have to pay, which can be quite considerable, for new data to be added to the data warehouse. You can add in any form of data, structured, unstructured data, so that can be all those new types of data that we've talked about: weather, machine logs, digital, and social behavior. Also, you have the opportunity, as we talked about, to analyze data in real time and using pre-built processes and models to respond to customers in real time. So that's going to be a new innovation that you'll be hearing and seeing soon. Another thing that I'll talk about is customer journey analytics. So comparing Australia's big four banks here is an example. Really what we have done is we have encapsulated all online commentary for the big four banks from January 2014 through to the end of July 2014. So for every single item that referred to one of those banks, it's been taken, it's been placed at the relevant point of the customer journey. So customer journey points here are from awareness through to consideration, and then ending up at evangelism at the end. So going through all the stages of making up their mind, making the purchase, and then experiencing the service. So after the item has been allocated to the correct point in the customer journey, it's allocated a score as to how positive or negative it is. So really that's what these scores are showing. It's showing the total scores obtained at these points in the customer journey. Now here, the big four banks in Australia are ANZ, Commonwealth Bank, Westpac, and National Australia Bank. So ANZ here is heading up the top level and are showing good scores of green across the board. Next in line is Commonwealth Bank, who are performing pretty well across everything, but just at the point of affinity, which is here, we've got a kind of red, a red score, and that was caused, we can relate back to the actual comments that were made adding up to this point. So system outage, unstable mobile apps performance, and cards declined by shops, ATMs, and unfriendly environmental brand image, so fossil fuel support. So that can all be surmised from all the information that was gathered online and organized, and we can organizations can understand how they rate and what are the real factors why they're doing so well or not so well at particular points in the customer journey. So it's a very valuable thing in considering a product launch, and so it can be focused on particular product areas as well. So just looking at these factors taken over time, so here we've taken the four banks over time, and we see that for Commonwealth Bank, they are certainly, well, including other banks, but are improving towards the end of the period here by having positive media coverage on their CSR activities in March, and also customer support for their new apps and mobile banking improvements in March. So a good story there. And also what this can allow you to do is to compare with some of the other metrics that are measuring customer satisfaction, for example. So here we have the Roy Morgan customer sat scores, and yeah, it does compare very well with them, saying that both CBA and NAB increased in satisfaction in those months, in the 5 months, but then ANZ and Westpac showed notable positive lift. So by comparing with metrics out there, and also by comparing with your customer perhaps churn levels or customer uptake of products, it's a good indicator to verify that these things are telling you the correct scores. So another example of using unstructured data is text analysis of call center notes and transcripts. So from that, so text analysis of call center notes and transcripts, so we can pick up customer life events, something like babies, moving house or lost job, and also future intentions or concerns. So saving up for a house, retiring in 3 years, going on holiday, etc. But if we can extract that information from text, we can create that as a structured piece of data that can then be used to trigger campaigns for a customer. Also sentiment analysis based on call center transcripts and the audio recordings. If we can pick up the words being used in the transcript and also the fluctuations of voice in the recordings, we can make a prediction of customer satisfaction levels. So if we have a history of the results of customer satisfaction in the past, we can predict them in the future. So it's a good way in the future of measuring measuring the change in customer satisfaction. So by combining that and also looking at customer behavior after, have they taken out more products, have they increased lifetime value, or have they actually churned or moved products elsewhere? So a good way to measure that. Also, predictive models for resource allocation. So in this case, it's looking at delivering leads to customers on the using the call center. So what this example does is we feed our leads into the system. Then there is a model which has been trained that finds the best lead to allocate to a particular sales agent. So if we optimize that and the agent gets a lead to which they feel that the customer is a customer that they're used to dealing with, or the product is a product they like selling, they're more likely to perform well with that. So we're using past history of that agent in the types of leads that they have worked well with, and the model learns from that. So we get better and better over time. Also, case studies on this. So Telstra, they automated their leads process, and they had a 66% improvement in providing feedback. So that was from sales agents out in various shops. So that was initially a very good result for them, but then it eventually resulted in 77% increase in closing sales. So a great improvement. So Westpac, from a 1-month pilot project, by we trained the model on the previous historic data. It only took 3 weeks to implement. So from day one, there was an immediate 19% increase in sales. So Aviva in Singapore, they've now been operational for 22 months on this technique. They also modeled on recent sales data, but now after this full 22 months, they've had a 34.4% increase in sales on average per month over this 22 months. And on their best month, there was a 65.2% increase. So network analysis, I think, is generally a very helpful tool and applicable in many areas. So if we can pick up links between different customers or different people that we're dealing with, there's a lot of things that a lot of information that we can discern and use that for. So first of all, if we can find people who are key influencers, who've got lots of connections and who do broadcast information to their connections, then it's a good opportunity to get them to trial new products and tell all their friends. Also, new predictors. We can certainly, there are new credit risk tools out there, and what they're looking at is people's connections and what the credit risk of their connections are. So it's likely that the original person will have a very similar credit risk. Viral marketing, so you want to seed that information out there. As we said, let's get it out to the broadcasters. Fraud connections, we want to understand who has certain links with people who are perhaps on the same claim or featuring a lot of times on the same claim. So perhaps doctors and lawyers featuring on same claims, or perhaps motor vehicle repairers. On top right, predicting and preventing contagious churn. So if you see one member leaving, you want to make sure that you're going to try and save the rest of their network. Dynamic pricing, but you can make special offers to particular parts of the community, but you need to make sure that they all get it. Otherwise, you're going to have some angry people. Also targeting for referral rewards. So yeah, let's get it out to the relevant points in the network to get good referrals. Okay, so that's some ideas of things that could be implemented in the business, and it's also getting started with unstructured data to get value from it. So now tips and ideas. I think in terms of getting started, it's important not to have to spend a lot of money, but just dip the toe in the water at the beginning, and in order to get some idea of the benefits. But if you have a lot of possible opportunities with different projects, I think it's good to prioritize those in terms of those which are going to be the lowest cost to implement and to give you the highest business benefit in the end. So here we are showing 4 possible projects, and the ones towards the top left are the ones that we really want to start with. So this fraud likelihood score number 1 is only going to take us 6 months to implement, but will give us the biggest business benefit of 2.5 million. Okay, so in closing, I have 10 tips on the business working with analysts. So those are, first of all, involving analysts early when solving business problems. So let them work with you to understand the problem, and so they can volunteer. They will understand what's in the data. They can start getting really involved in that problem with you, and keeps them feeling engaged. Second thing is avoid presenting a solution to the analyst. So you might think, okay, I just want this report with this along the top, month along the top, and my categories down the left hand side. So I think you really want to say, okay, and this going on to the third point, considering what your end result might look like, or what is the action to be taken from that analysis result. So it's really what are the business questions that you do have, and let the analyst perhaps make some suggestions what would be possible to solve your problem, and how what is the end result, what action is going to be taken. So I think that's important for you to work together on that. So then I think next is where possible, so this is with self-discovery tools, if you have them, work together on the same data. So certainly I hope you have one version of the truth, and working together on the same data in a scratchpad area or on shared dashboards. So if you, perhaps the analyst can come up with a dashboard, share that with you and allow you to drill down and say, okay, this is looking good, but I would like this or that. So if you can work in combination, it's very good. And also perform small proof of concepts to begin with. Don't spend lots of money. Just dip your toe in the water and prove the business case to begin with. I think it's good to have the analyst working with you in the same location with you for at least some of the time, so they get a view of what the business environment is like, and they just overhear things that are happening there. So it's kind of, okay, they learn by osmosis, just by being there. By helping analysts communicate. So I think analysts sometimes have a communication problem. They are very focused on data. So I think you do need to help them along and keep them focused on what the business problem is that they're solving, and make sure that they're giving you information in non-technical language. So do keep questioning them and telling them they need to be doing that for their own skills anyway. So there are storytelling from data courses out there. You might want to encourage them to go on that. Don't get data scientists to work in isolation. They need to be with the business. You don't want them going down tangents. also keep delivering what you can. I think don't wait till it's perfect. If you're perhaps experimenting with an offer for customers, perhaps just select a small number of customers to trial it on, and then things might not go perfectly to begin with, but I think it's only from finding out problems that you actually learn. Also, so from the last thing that we saw was start prioritizing what you can achieve today. Okay, so looking for our Q&As. So what if you don't have access to one of those self-discovery tools? So I think in that case, if you can get the analyst to share you some data which has got some drill down capability. I mean, even though I don't really recommend taking Excel spreadsheets out of the system, I prefer working on the base data warehouse itself, because we don't want to have results in spreadsheet mania. But I think it's good for you to be able to play around with data and do what ifs and so on. So I think it's not the end by not having a self-discovery tool, but they are quite cheap. So I would be suggesting that the organization could perhaps trial one. So there are free trials of these tools, and so on. So yeah, that's definitely an offer. Okay, another question is, okay, for unstructured data, what kind of, what do you need to be processing that? So you can start off by not buying any additional tools. First of all, your database or a scratchpad area in your database may allow you to load it just say into text format or whatever, and if you have a scratchpad area between you and an analyst, you can both work on it in that area. So certainly text mining, you could start off with something there. There are a lot of open source tools that are free that could be used. So so that's also an option for analyzing data. If you don't particularly have any tools at the moment. So so I think, yeah, if you also talk to your analysts, they probably know about what might be available that you could use. They could set something up for you. Okay, well, I think that's our half an hour up. So thank you very much for joining the webinar today. I hope you found it interesting, and please send any feedback or send any requests for future topics that you might be interested in. But thank you very much, and we hope to see you again. Thanks, bye.